Gold is selling off hard. But the real question now is, will this continue or are we about to see a pause? Coming into the new week, we've seen a strong bearish move on gold, and this is not random. Price has broken below that major $4,500 level for the first time this year, as we can see here on the 4 hours time frame, and now it's pushing into the $4,250 zone. That tells you sellers are in control, but also that we are entering an area where decisions need to be made. Now, fundamentally, this move actually makes sense. We are seeing rising US yields, a stronger US dollar, and reduced expectations for rate cuts. So, naturally, gold which doesn't yield starts to lose appeal. But here is where it gets interesting. When we shift to the lower time frame, and in this case scenario, we are talking about the 15 minutes time frame, price is still respecting this descending trend line. So structurally, we are still bearish, right? At the same time, the last few hours, price has been stuck within this range bound structure around the $4,300 level and the $4,130 zone. That's not continuation, that's the market slowing down. And this is important because what you're seeing here is not just price moving, it's the market recalibrating based on both technical levels and incoming data. So here's how I'm looking at it at this point. As long as price stays below this descending trend line, I'll continue to look out for selling opportunities. But a clean continuation is very much likely if price goes on to further break down the $4,130 zone. And on the flip side, if price breaks above this $4,300 zone and holds above it, and of course above that descending trend line, then we may start seeing a shift, at least in the short term. So for now, don't rush it. Let the market show direction after this pause. Trade smart, trade consciously.